Hey everybody, welcome to Everything Accounting. I'm Alfred Zaglul, your friendly neighborhood CPA, and I'm here today. We're going to talk about the three main types of taxes. It is the worst thing about any business. I get it. Like, no one wants to talk about taxes. No one wants to focus about taxes, but you need to understand taxes. So this is kind of where we come into play and we start talking about it for businesses purposes. For any business that's involved in Canada, you have three main types of taxes. You have your goods and services taxes, so your GST, HST taxes. You have your source deduction taxes, so that's any payroll, CPP, EI, income tax, your WCBs, all the stuff. But really, for the federal government, it's really just CPP, EI, and federal taxes for payroll. And then your last one is your net income tax. So all three of these are federal based. So in your provinces, they'll be very different, but from a federal government standpoint, those are the three main ones that you're going to be focusing on. First, let's talk about goods and services tax. So GST is applied across the board. So depending on your province, obviously it's either 5% or you charge the harmonized tax of 13%, 12%, depending on, again, the province that you're in. But goods and services tax as a whole is 5% across the board. The way that it works is if you have made $30,000 or more in your period, then you need to start charging GST for your services or your product or what have you, unless it is an essential good. So there's a list of essential goods. We can go through that in another video, but for now, in general, there's 5% GST that you have to charge on all services and goods that are being charged. You also need to make sure that in the period that you need to file it accordingly. But the way that it's filed is you have the goods and services that you've charged, but you also have the goods and services that you've paid. These are called ITCs, or income tax credits. Income tax credits are basically all the GST that you've paid on services or your vendors or suppliers or anything that you've purchased throughout the same period. And essentially, you need to pay the net balance of the two. So you have, say, you've charged in a year $5,000 in GST. But in the year, you've also paid about $2,000 across the board to all your vendors, also your suppliers, $2,000 in GST ITCs. So you take your GST charged minus your GST paid. That gives you the net GST that you owe in the period. So given this example, you're looking at $3,000 that you would owe for this period. Now, in terms of filing, this can be done either annually, quarterly, or monthly, and you can pay annually, quarterly, or monthly. But it depends on how you set up your GST account in the first place. On average, people are quarterly. It's typically the go-to, but when you first set up, it's possible that you set it up as annually, and it's possible that CRA got you to set it up as monthly. So it really just depends on your cycle, and it's really important that you either ask your accountant or you go on your My Business account with CRA and find out when your reporting cycle is, because that's what's going to dictate how you calculate your taxes. So the next thing to note about GST is that this is actually outside of your net income. So GST, HST is not a expense to be deducted on your income tax. So any GST and HST is going to live on your balance sheet, but not on your profit and loss sheet. So just make sure. And if you are unsure about what a balance sheet is or a profit and loss sheet is, we have another video for that coming up. So it's always, like I said, important to count that this is not going to be a tax deductible tax. The next one that we're going to talk about actually is your payroll tax. So payroll tax is amounts that you are deducting from your payroll staff. So you as an employer have to deduct CPP, EI, and federal income tax from your employee. But on top of that, you as an employer have to pay your portion of CPP, which is usually a 1-to-1 ratio, or EI, which is usually a 2.4 times what EI is being paid for the employee. No employer has to pay additional federal income tax, but all of that is encompassed. So that is what we consider your payroll tax. Now, the way that this one works is a little bit different. Every month, you have something called the PD7A, which gives you the breakdown of all the payroll remittance taxes that you have to submit for the month. It needs to be submitted every month. Now, there's payroll softwares out there that can do this for you for fees, or you can calculate it yourself and pull it. Say you're using QuickBooks or Wave or whatever accounting software you use, it will actually calculate it for you, but it pumps out a report and then you have to just submit it, file it, and pay the amount. You will essentially pay it month over month over month for the 12-month period. And then the way that CRA reviews it is actually at the end of the year when you file the T4s related to your payroll, it'll look to see what the difference between what was deducted and what was claimed to be deducted on the T4s. If there's a difference, say you paid a little bit more than what was submitted for T4s, then cool, CRA will pay that money back to you. If you paid less, then CRA is going to send you a letter, be like, hey, you paid less. This is what needs to be paid. This is the penalty for not paying the entirety of the amount, and this is the interest on it. So essentially, at the end of the year, you will have to pay the additional difference to make sure that you're completely covered. So it's really important that throughout the year, you pay down your source deduction amounts. The next thing that comes up with source deduction amounts is obviously when you pass on the T4s, or your accountant pass on the T4s, this is tracked by your employees actually claiming their taxes. So it's all really a flow through of where the taxes land and what's being accounted for. So that's why it's really important to pay the source deduction taxes. The next tax that comes up is income tax. So depending on your province, there's a different tax rate for corporate taxes. There's a different tax rate for sole proprietorship taxes as well. They get taxed differently because sole proprietorship is technically self-income and not incorporations. And an incorporation has a different tax rate entirely. So it's really important to understand the kind of business that you're running to then dictate how much you're going to be paying in taxes. Now, your income tax is calculated at the end of the year, and your tax accountant, needs to basically file and pay your taxes. With income taxes, especially for incorporations, you have to file 3 months after your year end. So if your year end is December 31st, you have until March 31st to file your taxes. You have 6 months to pay whatever taxes you owe. But typically your accountant will tell you, hey, I filed this, here's what you owe, it's probably best to pay this, right? And the longer you have, the more time you have to essentially pay down what you owe, and gives you a little bit of a runway, essentially. But typically what I like to do is I give my clients, hey, here's your tax filings before the 3-month period, and here's what you'll owe. You owe this at this date, pay it within this time frame. So it allows for a little bit more clarity on that end. Now, when you log into your My Business account, and this is kind of your source of all things CRA. This is your source of information. They'll send you letters here, mail. They'll send you your balances. They'll keep balances for you. But to understand the difference between the 3 taxes, you'll see your business number and then either RT, RP, or RC 000 and then a digit. The RT, RP, and RC define what kind of tax you're being billed for. So if you get a letter that says RC, for instance, on the business number, then you know that this is related to corporate taxes. If you get a letter that says RT, you know that's related to goods and services taxes or the GST, HST taxes. And if you get a letter that says RP, then you know that it has to do with source deduction taxes. So this is kind of the best way to define it. I also like to make sure that my clients understand this, because I've had a lot of clients come to me and be like, hey, I thought I paid my income tax, and then I see that it says RP on the letter, and I'm like, yes, you paid your income taxes, but you owe for source deductions. Or the letter comes in and says RT, and they're like, hey, I thought I was completely paid up for everything. What is this for? And I'm like, this is for your GST. Without even reading the letter, I know that it's dictated for that. So it's really just important to understand the differentiation between those three tax codes, and that'll allow you to really understand what you're looking at in terms of what CRA is asking you, right? It's very long-winded, I get it. Taxes as a whole are not fun, but the more you understand your taxes, the more you'll actually get to know how to maneuver to make sure that you are successful in paying in time, paying the right amount, and still growing your business successfully. So really, really, really important now, especially when tax season is coming up, to understand when you need to file your corporate taxes, when you need to file your payroll taxes, and when you need to file your GST taxes. And then on top of that, knowing when to pay them. So always, always, always try to keep track of that yourself. But on top of that, make sure you're talking to your accountant to make sure that they know your schedules, right? Keeping that relationship with your accountant will always make sure that you are in line with your taxes, and making sure that if they know that you understand it, then it'll help with the entire process and you will never have issues with your taxes. Anyways, this has been corporate taxes for anything that has to do with CRA in Canada here. And honestly, hopefully you learned something from this video. Hopefully there's some insight that you received from this. And as always, I'm your friendly neighborhood CPA, Alfred Zaglul, and this has been Everything Accounting. Hopefully you learned something, and hope to see you guys soon.